Welcome to Dave's Daily Crypto Take. Today is Wednesday, November 16th, 2022. Let's take a look at today's charts. At number one, BTC is at $16,825.75, up 1.09%. Ethereum at number two, $1,257.02, up 0.90%. Tether at number three, 99 cents. USD coin number four, $1. BNB at number five, $277.33, down 0.91%. Binance USD, $1. XRP number seven, 38 cents, up 1.94%. Cardano at number eight, 33 cents, up 2.32%. Dogecoin at number nine, 8 cents, up 0.04%. And last but not least, number 10, Polygon at 93 cents, up 0.32%. Let's take a look at the crypto fear and greed index. Extreme fear can be a sign that investors are too worried that could be a buying opportunity. And when investors are getting too greedy, that means the market is due for a correction. So what we got today is extreme fear at 23. Yesterday was extreme fear at 22. Last week was fear at 29. And last month was extreme fear at 20. Let's look at our 4 articles today. Article number 1 is the head of the world's largest crypto exchange says that most people shouldn't invest right now. Article 2, Bitcoin holders, whales, and miners, the impact of FTX on the state of BTC. Article number 3, Cryptoverse, so long, Solana, either rival clobbered by FTX crash. Article number 4, Bitcoin, assessing the odds of BTC investors surviving the long winter. So before we get into the articles, just want to say thank you so much for coming by Dave's Daily Crypto Take. You can catch me on the YouTube channel. Please like, share, and subscribe. And if you're in the YouTube podcast space, please check me out at Apple, Spotify, or Google Podcasts. Again, it's Dave's Daily Crypto Take. All right, let's get into it. Article number 1. The head of the world's largest crypto exchange says that most people shouldn't invest right now. Even the crypto industry's leaders are cautioning investors against buying the dip. With cryptocurrency prices so low, it might seem like a good time for first-time buyers to invest, after industry figureheads like Microstrategy's Michael Saylor and Tesla's Elon Musk popularized the buy the dip crypto trend this year. But the market is going through unprecedented turbulence right now, after last week's sudden implosion of FTX, one of the largest crypto exchanges, and the fall from grace of its founder and ex-CEO, Sam Bankman-Fried, a former hero to crypto insiders, combined with a crypto winter that has dragged down cryptocurrency prices since last spring, then basically we have the market is rife with uncertainty and low consumer confidence. Because of this, first-time investors without abundant disposable income who are unprepared to lose money should steer well clear of crypto at the moment. At least that's the advice of one of the sector's most powerful remaining players. You should not invest in crypto if you're using money that you need for next week or next month. You should only be using discretionary cash that you don't need for a long time. Changpeng Zhao, CEO of Binance, the largest cryptocurrency exchange, said in Ask Me Anything session broadcast live on Twitter Monday. Zhao warned that after the FTX collapse and plummeting confidence in the crypto market is in a period of high volatility and unpredictableness that makes it particularly unfavorable for inexperienced investors or those without ample funds. Unless you're experienced, very mature, and very confident and can handle the risk, I would recommend most people just hold for this period of time, he said. So the crypto chaos, the spectacular FTX collapse has sparked a reckoning in the crypto world. Last week, investors withdrew over $6 billion in Bitcoin and Ether, the two most popular cryptocurrencies, from exchanges following the meltdown, according to blockchain analytics firm CryptoQuant. And to top it off, between $1 billion and $2 billion in funds stored with FTX went missing over the weekend. Reuters reported an intrusion that may have been the result of a hack. The FTX collapse is the latest in a series of high-profile crypto failures this year that also included lending platforms Celsius and Voyager Digital. Overall, the crypto industry has shed over $2 trillion in value since the cryptocurrency market cap hit an all-time high in November 2021. Crypto's dire straits have emboldened longtime skeptics to vent their frustration with the technology, including top U.S. financial regulation advocate Dennis Kelleher and Berkshire Hathaway Vice Chairman Charlie Munger, Warren Buffett's right-hand man, who has previously compared cryptocurrency to a venereal disease. Critics like Kelleher and Munger have advised against investing in crypto for years, citing its volatility, its speculative nature, and the opaque tendencies of crypto companies. During his AMA, Zhao also attempted to distance Binance from the accusations of mishandled customer funds that have reportedly made FTX the subject of federal investigations by the Department of Justice. And the Securities and Exchange Commission, he said that users should continue trusting Binance as the company would never take user assets and give it to a third party, as FTX and Mr. Bankman-Fried have been accused of doing. We don't have loans, we don't have debt, we don't owe anybody any money. We also do not give loans out of the platform, Zhao said. So let's rebuild. Despite the downturn, Zhao insists that last week the crypto market can still heal itself, especially with the help of more regulation, a view shared by several other industry leaders. On Monday, Zhao announced on Twitter a new industry recovery fund at Binance that would help finance and support promising crypto-related projects that are facing liquidity issues or have been otherwise affected by the ripple effect of the FTX collapse. Crypto is not going away. We are still here. Let's rebuild, he wrote. Last week, Zhao and Binance nearly bailed out FTX as it teetered by the offering to buy the company. But after examining the company's books and finding financial problems, Binance retracted its proposal. Bankman-Fried later said he assumed Zhao and Binance had never really planned on buying FTX, according to a New York Times report published on Monday. I shouldn't throw stones in a glass house, so hold back a bit, Bankman-Fried reportedly wrote in a message to employees reported by the Times, except to say probably they never really planned to go through with the deal. So there you guys have it. What do you guys think about this article? We have here, basically, the head of the world's largest crypto exchange says that most people shouldn't invest right now. Comment down below and let me know what you guys think. All right, article number 2. Bitcoin holders, whales, and miners, the impact of FTX on the state of BTC. Bitcoin hodlers withdraw historic amounts of BTC from exchanges. Miners continue to feel the pressure amidst the FUD. Mistrust in exchanges has continued unabated ever since the FTX collapse. Now, in an unprecedented move, many BTC hodlers have started withdrawing huge amounts of Bitcoin out of their exchange wallets. Lots of fish in the sea, but not BTC. According to a tweet on 14th November by Glassnode, a crypto analytics firm, investors were withdrawing coins to self-custody at a historic rate of 106K BTC per month. Obviously, the FTX development impacted whales and sharks massively. However, as can be seen from the image below, not just whales, but sharks, shrimps, and crabs moved their BTC as well. Miners also seem to be in a panic mode as miner balance declined over the past week, with hash prices at an all-time low. Things could get difficult for them in the long run. Miners may have to sell their BTC to make a profit, which might affect the price of BTC in the future. Bitcoin's volume also witnessed a decline over the past few days, as can be seen from the image below. Since 9th of November, the volume depreciated from 125 billion to 39 billion at the time of writing. The daily on-chain transaction volume also declined over the past few days, suggesting that few Bitcoin hodlers could make a profit. The MVRV ratio of BTC declined as well, implying that most hodlers will realize losses if they all sell their holdings at the current price. Another indicator to support that would be the fact that a large amount of Bitcoin supply was in loss as it reached a 2-year high of 9,389,042.100 BTC, according to the data provided by Glassnode. It remains to be seen whether more Bitcoin hodlers succumb to sell pressure and sell their BTC. At the time of writing, Bitcoin was trading at $16,785.42. Its price has appreciated by 1.15% in the last 24 hours, according to CoinMarketCap. Its volume also witnessed an uptick of 56.39% during the same time period. So, there you guys have it. What do you guys think about this article? Bitcoin hodlers, whales, and miners, the impact of FTX on the state of BTC. Comment down below and let me know what you guys think. Okay, article number 3. Cryptoverse, so long Solana. Ether rival clobbered by FTX crash. And what we have here, Solana, a poster coin of the crypto future, is in trouble. The cryptocurrency, which had been lauded by FTX founder Sam Bankman-Fried, has been hit harder than any other major coin by the collapse of the exchange. The Solana token, or SOL, has dropped 53.8% since the furor began unfolding on November 2nd. By comparison, Ether has fallen about 20% and Bitcoin 19%. In the current crypto shakeout, the most unfortunate innocent victim is the Solana ecosystem, said Stefan Rust, CEO of blockchain wallet company Laguna Labs. He and several other crypto players said FTX and sister firm Alameda Research likely sold a large amount of the coin in an attempt to stay afloat. Many investors and app developers look to be leaving the Solana blockchain, which is widely used for decentralized finance applications. The number of Sol coins deposited there has fallen to 24.74 million, some way south of the 68.2 million seen in June, according to data from aggregator DFilama. FTX and Alameda Research didn't respond to requests for comment. Solana co-founder Anatoly Yavokenko tweeted that development company Solana Labs didn't hold any assets on FTX and had enough financial runway for about 30 months. Another co-founder, Raj Kokal, said this was a crucible moment for the ecosystem, adding each time we're stronger. Nonetheless, uncertainty stalks the blockchain that's been dubbed an Ethereum killer in the past because of its lower transaction fees, faster processing speed, and potential to scale. It's not the end for Solana, said Adam Struck, an LA-based venture firm Struck Capital. It has established itself as a thriving ecosystem and competitor to Ethereum. But do I think valuation is a little frothy? Yes. Some see a silver lining. It's much better for Solana that the connection with Sam Bankman-Fried's empire is ending now. Even if the result is serious short-term pain, said Jack Sarako, a co-founder of digital bank and payment solution firm Ping. Sol's market capitalization has shrunk about 55% since November 2nd from $11.6 billion to $5.1 billion, according to data from CoinGecko. Ether's market cap has fallen 21% to $150.7 billion, while Bitcoin has fallen 18% to $319 billion. Blood in the streets. The FTX saga has been unfolding in early November when news website CoinDesk reported a leaked balance sheet that showed Alameda Research was heavily dependent on FTX native token, FTT. Reuters was unable to verify the report. The exchange filed for bankruptcy on Friday after traders rushed to withdraw $6 billion from the platform in just 72 hours, and rival Binance abandoned a proposed rescue deal. The collapse of the company has seen more than $190 billion wiped from the value of the overall crypto market. This is what the old guys used to call blood in the streets, said Martin Leubenberg, digital asset product strategist at Market Vector Indexes. There is no Fed or Treasury here to support prices, so the market simply cleans things up. Yet, even amidst the bloodletting, there was some unexpected stability from stablecoins, which are pegged to the value of mainstream assets such as the US dollar in an effort to reduce tame crypto volatility. Despite the biggest stablecoin Tether having a brief wobble when it touched 98 cents according to CoinMarketCap, it managed to maintain its peg to the dollar, as did USD Coin, the second largest. Most stablecoins performed within their normal volatility bands with the exception of some small algorithmic ones. That's a reversal from earlier in the year when the coins, notably Tether, lost their peg as the market was hit by volatility following the collapse of Terra USD stablecoin. Some investors attributed the new resilience of the stablecoins often used to move funds between crypto and regular cash to greater transparency over their reserves. Everyone expected Tether would be the first to fall, but it hasn't, said Sarko at Ping. I think a lot of observers don't realize how battle-tested Tether really is. So there you guys have it. What do you guys think about this article? Cryptoverse. So long, Solana. Ether rival clobbered by FTX crash. Comment down below and let me know what you guys think. All right. Last but not least, the main topic today is Bitcoin, assessing the odds of BTC investors surviving the long winter. BTC held by the exchange was at an all-year low. MVRV ratio and weighted sentiments were up. Elon Musk recently posted a tweet regarding Bitcoin, wherein he mentioned that BTC will make it, but might be a long winter. In line with the above-mentioned tweet, Bitcoin's latest price action was not that promising. as the King coin failed to register major upticks. According to CoinMarketCap, BTC's price was down by over 14% in the last 7 days, and at press time, it was trading at $16,744.72 with a market capitalization of over $321.9 billion. Wary, an analyst and author at CryptoQuant, recently posted an analysis that revealed some interesting information regarding Bitcoin. Can BTC recover soon? In the analysis, Wenry mentioned that the amount of BTC held by exchanges was at an all-year low and was close to the level of January 2018. When trade holdings decline, the selling pressure usually weakens. So